G'day mate, thanks for the comment. I wanted to record a quick video to explain why I don't trade the stock market and why I suggest that for the vast majority of people, actually accumulating stocks is the best solution for them. Now, of course, this is general advice and it doesn't take into account your personal circumstances, so let's explain. Now, I'm not quite sure if I'm reading into this, but you did say trade, and typically speaking, trading the stock market means that we are speculating. We're looking to buy a stock at a particular price, we're looking to exit at a higher price, we're looking to realise the gain and then move on to the next opportunity. The fundamental principle here is that by trading the market, you believe that you can outperform the market on average, or that you believe that you can time that trading in order to maximize your gain. That puts you at a better position than if you were to accumulate those shares over time. Now, the issue with this is a couple of things. One, timing risk when it comes to investments is amplified and increased the shorter the time horizon. So for many successful traders, professional traders, they're trading on very short duration. Typically speaking, they're holding stocks for weeks, potentially just months. And for that reason, they're doing research, they're trying to understand the intrinsic value, they're trying to buy it below that value or based on the fundamentals or what the charts are showing in terms of trends, and then they're exiting after they've made a particular profit. Doing this in reality for the vast majority of people is very, very difficult. To give you an example, let me just show you. So I've just gone to what's called the Spivak report, SPIVA. And what this basically shows is that over 15 years, the active fund managers who have been able to successfully outperform the index after fees and taxes. And almost 81% of professional fund managers, these are people that do this for their full-time job, they manage people's money professionally, have underperformed the ASX 200 after fees and taxes. So less than 20% have been able to successfully outperform. It is very, very difficult to do. The reason for this primarily is a couple of factors. One, investing in the index is very, very cheap. So let's say, for example, you go and buy an ASX 200 index fund, it might cost you like 0.2%, so like 1/5%. If you go and invest actively, typically speaking, your trading costs are going to average between 1% and 2%. So your costs of actually facilitating this just purely on a transactional basis is 5 times higher at a minimum, sometimes 10 times higher than just accumulating the index. The second issue that you've got is that every time you make a gain, you are crystallizing that gain, which you are required to pay tax on. If you're an individual that you're trading and you're holding those investments for less than 12 months, you're going to be paying your marginal tax rate. So if you're earning over 180 grand a year, you're going to pay 45 cents tax in a dollar. If you're doing it in a company, you're going to pay 30% tax, which still means you're losing 1/3 of your gains every single year, which does not have the ability to compound over time. And for all of these reasons, the costs associated with doing it, the crystallization of the tax, and also the macroeconomic factors of getting your timing right, it's very, very difficult to trade and outperform the market over time. So for myself personally, I accumulate the stock market. I use a diversified index fund. I invest each and every single week, fortnight, month. I increase that contribution every single quarter, and then I just allocate money to the market. And it doesn't matter if it goes up, down, or sideways, I continue to accumulate, and I don't crystallize those gains at any point in time. I just continue to accumulate either until I achieve the goal that I want to achieve, or I find a better strategy. For example, maybe I'm using it to save up a property deposit, then I can then use that money to then use leverage to maximize my exposure. So just be very careful with the idea of trading. Particularly business owners feel that because they've manufactured wealth in their business, they can do exactly the same thing in the stock market or in property and implement these kind of flipping or trading strategies. And in many cases, it does more harm than good. Hope this is helpful.